Welcome back. So just minor gains on the benchmark indices. Let's get you a fundamental view on the market. We have Jyotivardhan Jaipuria joining in for exactly that. Jyoti, always a pleasure having you on the show.
Hi.
So it's been It's been an interesting narrative for the market, right? I think people have now learned to look away from the index and really focus on individual stocks, because that's where a lot of money has been made in the last 2 months. First of all, what have you made of this summer rally, if I could really call it that, the sizzling summer rally? And which are the individual pockets? If you can share names, and that'll be great. But otherwise, give us some clues as to what you have your eye on in the market.
Yeah, so Sulbi, I guess a couple of months ago when we turned more positive, there were three reasons. One was interest rates had peaked, and which we continue to believe. Second is earnings were holding up, and we said earnings will continue to be strong in spite of probably a global slowdown. And third was that valuations had become more reasonable. And so, we continue to hold that view that we like the market, but valuations are no longer now comfortable. So I think we are headed probably for a spell where we get, some sort of consolidation, maybe a bit of correction. We were bullish on small cap, which was very anti-consensus at that time. And we continue to believe that the next few years are going to be very good for small cap, because I see earnings picking up, I see the economy picking up, and small cap generally do better in this sort of environment relative to large cap in terms of earning growth. And secondly, they are much cheaper than the large cap. So I think, small cap is a space which will do better. And so any dips, I think you should buy those. A couple of sectors we focused on which have done well for us have been a lot of the domestic names. So capital goods has been one of our favorites, has done very well. At this level, I think it's starting to look a little toppish. Banks have been the other, cement has been the third. So these three, we continue to like these sectors, though I think we like a correction. Probably, where we have incrementally turned more bullish, and that may be interesting to you, is the pharma sector. So that's something, for 18 months we had been avoiding pharma because we had a sharp post-COVID rally. And our view was that, okay, now a lot of the gains we saw in earnings will probably evaporate as COVID disappears. But now, the pharma sector is starting to look very attractive. And this is something where we bought a couple of stocks in the last few months.
Okay. Would you want to take us through anything specific that you like within the pharma space?
Yeah, Pavitra. So, I'll just split it into two. So one is, we like the domestic pharma. And, domestic pharma is like a very steady thing. We've always thought about it like a quasi FMCG. And so domestic pharma is looking good, and there are a lot of companies there which just continue to grow. So you're getting a lot of compounding stories there, and at multiples which are much lower than what the FMCG companies are. So that's one segment which we like, and which used to like maybe 6 months back also. The segment we got bullish on now is, the US generics. So as you know, US generics is where all the pharma companies have been seeing a lot of pain in the last few years. And you've had a constant, decline in earnings year after year in the US generics. We think that the US generic now is more or less close to bottoming out. Mind you, the prices are not going to shoot up or something, but you'll probably see it plateauing. You see it probably, more or less at these levels, which is a big change from the negative growth you saw all these periods. So I think, the US generics is where we have added to our positions, taking a call that a lot of pain is behind us. There are segments in the business which are growing, and US generics was giving a negative contribution. Now that negative contribution is behind us, at least there won't be a bleeding happening from US generics. You may actually see a bit of positive growth coming there. And so a lot of these things have underperformed for the last 3-4 years. They've underperformed massively. Ownership has come down because most people have sold them. And I think it's a great time to get them at cheap valuations.
Okay, so you're turning bullish after a long gap on US generics, and you like the domestic Indian pharma plays. Got that, Jyoti. Jyoti, stay on. We want to talk to you about specialty chemicals as well. But before we put that question up, let's look at the numbers and the data. So export data is in, and quite a few stocks seem to be reacting today on the downside. Sonal, what have you made of the trends? What are the numbers looking like for me?
Well, overall, does not look like a good trend this time around, barring a few companies which have done well on the export side. On a YOY basis, most of them have seen a substantial decline, some recovery for month-on-month basis for some of the companies. Let me start with Aarti Industries. They have been talking about demand pressures in the discretionary segment, which is coming in from the export markets. That can be seen in the numbers as well, down 46% on a YOY basis, though on a month-on-month basis, they have seen an increase here. Aether Industries, 23% down YOY, 39% on a month-on-month basis. So the export continues to see a downtick here. Alkyl amines on the other side is one of the stocks which has seen an increase both on a month-on-month and on a YY basis. Anupam Rasayan has seen a big decline in the export numbers, anywhere to the tune of 79 to 82%. Similar is the story with Atul Limited. Archean Chemicals, though, has done well, an increase of 26 to 28%. Balaji Amines has seen a decline on a YY basis. We have Clean Science, which has seen a decline of 23%, though it's up 13% on a month-on-month basis. Deepak Nitrite too is seeing some decline in exports. So the theory is that maybe some of these companies continue to see an impact in the export markets. PI Industries is one of the companies which is seeing an increase both on a month-on-month and on a YY basis, despite the fact that most of the global agrochemical companies are talking about higher inventories and lower sales coming through. For Lakshmi Organic, it is a decline on a YY basis, but a slight improvement on a month-on-month basis. Naveen Fluorine also stellar numbers on the export front here, 44% higher. It could also be because of their HPP segment, where they are increasing their capacity, and this is something that is doing well for them. It is an export client for them here. SRF has seen a decline both on a month-on-month and on a YY basis. Sudarshan Chemicals, they did indicate in their Q4 numbers that exports have started to pick up, and that's why a 17% increase on a month-on-month basis for Sudarshan Chemicals, so going as per their commentary as well. But if we summarize it, it's good only for some of these chemical companies and not as a whole, so export theme is not working so well for them.
Okay, got that. Thanks, Sonal, for the details. I'm looking at the stock reactions. PI is reacting really well to that really solid growth of about 44%. There's a 3% pop on PI. SRF is reacting negatively. It's down about 3.5%. Jyoti, this is a really complicated space, and each company has its own story, its own set of chemicals that it's operating in. You tell us anything you like?
Yes, like you said, it's a space where you have to look at each company separately. But in general, like, I'll make 2 points. One is, global slowdown is there. And, especially in the global agrochemical space, there's a massive slowdown. So if we go back to our theme for 1 year, we've been saying avoid global and buy local stuff. And it's been for that reason only that you can't anticipate the global slowdown. The other is China is a big player here. China had, shut down at some point, so they're back, and that is creating its own dynamics in the space. So some companies are gaining from China coming back, some companies are losing. For us, it is, we prefer pharma to chemicals in general, but within chemical, we are looking at companies where there's some new capacity which has just come in, and that capacity is tied up. So to that extent, you have some volume growth coming in, which will help earnings over the next 12, 18 months. So that's the way we are focusing on them. We find a lot of these chemical companies very, very expensive, and we stayed away from them for the last, 2 years, actually.
Okay, got that. Jyoti, one more space I want to ask you about is, and I know you've said this in our last few interactions, that you're, staying away from IT or any global-facing sectors for now. But look at the kind of move that we're seeing on a lot of these mid-cap names. In fact, we were speaking to Sonata this morning. They're saying things are looking perfectly fine. There's no demand trouble. The next few quarters are going to be solid. Do you think any of these now warrant, some kind of looking at now? The mid-cap space, particularly.
Yeah. So, Pavitra, in general, I would say, we are getting more interested in IT simply because of the valuations. That we've seen valuations correct a bit. So stocks have done badly for a long time, and now more people are staying away from it. So it's getting interesting from us from that point of view. In terms of visibility, what happens is companies tend to be optimistic till they see a slowdown. And so far, we've not seen any slowdown in the US. Frankly, if you look at the data in the US, the economy growth is surprising on the up rather than, leading to a slowdown. So it is maybe the pain is still to come in terms of the US slowdown, or maybe, the slowdown not going to come and all of us will keep waiting for it. So frankly, we've not bought the IT people yet, but we are looking at it now thinking, okay, what is a good time to, probably start at least nibbling into the IT names.
All right, got that. Good talking to you, Jyoti. Thanks very much for joining in and giving us some perspective. All right, you have a good day. And with that, we do have to take a very quick break. Housing finance companies have reported strong growth in assets managed over the last 3 years. All the details coming up in our special segment, Fin Street.